Welcome to today's video, where we will be discussing how to analyze the performance of Indian ETFs. ETFs, or exchange-traded funds, are a popular investment option for many investors due to their diversification benefits and low-cost structure. However, it's important to analyze their performance before investing in them. In this video, we will discuss the key factors to consider when analyzing the performance of Indian ETFs. Firstly, we need to look at the expense ratio of the ETF. This is the fee charged by the ETF provider for managing the fund. A lower expense ratio is generally better, as it means that more of your investment is being used to buy the underlying securities. Therefore, it is important to compare the expense ratios of different ETFs in order to find the most cost-effective option. Secondly, we need to consider the ETF's tracking error. This is the difference between the performance of the ETF and the performance of its underlying index. A lower tracking error is generally better, as it means that the ETF is tracking the index more closely. This can be caused by a variety of factors such as trading costs, management fees, and tracking errors in the underlying securities. Therefore, it is important to analyze the tracking error of the ETF in order to determine its accuracy in replicating the performance of its underlying index. Thirdly, we need to analyze the composition of the ETF. This involves looking at the securities that make up the ETF's underlying index. It is important to ensure that the ETF is diversified across different sectors and companies to reduce the risk of concentration. Additionally, we need to look at the weightage of each security in the index to ensure that it aligns with our investment objectives. Fourthly, we need to look at the liquidity of the ETF. This refers to the ease with which we can buy or sell shares of the ETF. A more liquid ETF is generally better, as it means that we can easily enter or exit our position. This can be important in times of market volatility, where we may need to quickly adjust our investment portfolio. Finally, we need to look at the historical performance of the ETF. This involves analyzing the returns of the ETF over a specific time period. It is important to consider the returns of the ETF relative to its underlying index and other comparable ETFs. Additionally, we need to look at the volatility of the ETF's returns in order to determine its risk level. In conclusion, analyzing the performance of Indian ETFs is an important step in the investment process. By considering factors such as the expense ratio, tracking error, composition, liquidity, and historical performance, we can make informed investment decisions. As always, it is important to conduct our own research and consult with a financial advisor before making any investment decisions. Thank you for watching, and I hope this video has been helpful.